Welcome to the StockMentor.com studios. Here in the Black Hills of South Dakota, I'm your stock mentor, Brian Johnson. That is my real name, it's not a pseudonym. And here is a market update video. It's been a while since we've done one. Turkey week, just very busy. Lots of family in town. And so I didn't get around to doing one. Anyway, not one of the free ones. I did them all week long. Just doing them for the subscribers alone was a pretty big chore. So, and I took like the rest of the week off. Once Wednesday hit, when we were done with that, I was done as well for the week. So, anyway, as it is, what have we seen so far? We saw a pullback the first couple days of this week, and this nice little V, what's kind of like a V bottom look to the day. We started with this gap down in about, let's see, we were half an hour, 45 minutes into the day or so, and it started to pile on the buying, just moving straight back to the upside. And every indice, basically what we saw here, guys, this morning, every indice hit a lower support area or got close to a lower support area of some sort, and then absolutely flew itself back to the upside. It was great technicals, really was. And so now we're left with this. You can see we're back up into the overhead resistance areas. And for those of you that kind of like chart patterns and stuff, yes, we are setting up what could be an inverse head and shoulders here. So we're watching very closely to see what we get tomorrow morning. There's some big economic data coming out. It's the GDP numbers. And it's always hard to predict what you'll see from these numbers. Sometimes people go into it going, oh yeah, we're going to see some major moves tomorrow, and then nothing happens. It literally just flatlines. The numbers aren't really revealing, or they were exactly what people expected, no some major surprises, and so the market goes, yeah, whatever. So we'll wait and see what we get out of these numbers in the morning. So it's jobless claims, it's GDP, and it's before the market opens. So by the time the market opens, we should have a good feel of where we're going, at least to start the day. So, one of three things: gap up, gap down, or nowhere. Yes, I know. It's just it's amazing the foreknowledge I have for these things. But what can we glean from that? Well, let me tell you what we can glean from that. We are setting up for, as I said, this inverse head and shoulders. It's even possible on some of the indices that we broke an inverse head and shoulders back in this area here. It's not as clean on the SPX, but you'll see as we go forward, some of the other indices are great. Okay, they really show this off nicely. If we get some sort of a large gap up tomorrow, guess what? We could be into a new push to the upside, and this push to the upside could be a big push to the upside, making for major gains from the bull side. Can I say bull side even one more time? Into the 13.3 to 13.350 areas, what you'll be looking for first, this is just first level of overhead resistance. We could be entering what the Elliott wave guys call like a 3 of 3 up. And if it is, it's gonna just cut through all of this stuff in front of you like a knife through butter. It should just really push itself upwards. Welcome to December. Welcome to the Santa Claus rally. Now, we've had kind of a bad year of economic data and blah, 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 whatnot, and not another thing. So it's rare that we see a drop in December. I want to bring this to your attention. All right. So for those of you that are tuning in here, you have to be cautious about the Santa Claus rally, which is what everybody pumps this time of year. It's certainly legit to be looking for it. Absolutely. Historically, it's what we see. We see stocks rise into December, and I'm not going to tell you anything different. As a matter of fact, I'm going to say expect stocks to rise in and through December and probably towards the end of the year. This is usually how it works, guys. We come into Thanksgiving, we get into December. First couple weeks of December tend to grind their way upwards. Little up, little down, but mostly up. Okay? And then you get into the last 2 weeks of December, and it's all but useless to try to trade. Usually it's very slow movement. You're up 3 points one day, down 2 the next, up 3 the next, up 2 the next, down 3 the next. It's so tedious. Go back and look at previous Decembers and you'll see what I mean. It usually just doesn't amount to a whole lot the last couple weeks. Nobody wants to make any big moves. The big money's all home with the family doing whatever and waiting until the beginning of the year, send out new reports for their investors, and away we go into January. But as it is, expect things to maybe pick up coming into December. We have had a bad year. There is the possibility that we will see some sort of big drop in December as opposed to a huge pop in December. But I'm going to tell you guys, I know the bears love to be bearish. There are the perma bears out there, and that's all they talk about is, oh, we're dropping, oh, we're dropping. I just, you know what? I'm not built that way at the site. I'm very much a let's look at both sides of the argument and which one makes the most sense at this point in time. And right now, I mean, the numbers have been pretty decent, what we've been seeing coming out of the economic world, and the GDP numbers might just be kind of the icing on the cake, if you will, for the start of things to come. So, let's see what these numbers bring us tomorrow. But I'm still expecting into December, even if we drop tomorrow, even if we get down below 12.7 tomorrow, I'm still expecting us to turn around and come back up and break this 13.1, 13.2 area and move on to some higher numbers coming into December. So there you go. Now let's spend the rest of the video talking about the markets itself, but I want to bring that to your guys' attention just so you know. I don't know, put a bug in your ear, let you guys think, chew on that for a while. That's what I'm going to be looking for coming into this new month. All right, historically, we get the Santa Claus rally. It's just what happens. And here I go again on my soapbox, but look, we had apparently record-breaking numbers of people shopping on Black Friday. Didn't go well, but that was because they opened the doors early on Thursday. But when they took Thursday and Friday combined, it was like record-breaking. And then Cyber Monday was record-breaking, and billions of dollars were spent, and blah, blah, blah. So the holiday numbers are all good so far. And a lot of the economic data we've seen has been actually pretty good so far. And so if that continues, there's no reason to think we won't get a Santa Claus rally. So don't get too stuck on, oh, we're going to drop, you're going to get yourself buried is what you're going to do. You're going to get into something that you don't need to be in to the short side, and you're going to have to sit through it all of a month. Here's a great example. Go back in your charts and look at last year. And starting late November, we started a trudge, and I mean a trudge, to the upside. And if I'm not mistaken, it took us into deep March or April before we saw a major pullback in the markets. And I distinctly remember that time because I remember thinking to myself, good grief, are we ever going to drop? Is there ever going to be a major pullback in the markets? It was just such a grind. Now, when we did drop, it wiped out like weeks worth of bulwark in about a couple of days. But the point of the matter is it started around this time. I don't want you guys to get, I don't want you to lean one way or the other. I'm not trying to make you mega bullish either. I'm just telling you that historically what we see is bullish movement around this time of year. Don't get too bearish on this market. You might end up getting yourself buried in something that you might have to, end up either eating later on down the road, or you're going to be in something that'll grind its way through January, grind its way through February, and maybe March before you finally start to see something come back your direction. Who wants to sit through 2 months of that? Nobody. It's the emotional side that'll kill you in this business. It really is. So you don't want to sit through it. Just be cautious with your stuff. If you're going to go short, fine. But I'm telling you, right now, you have to put stops in. Period. I can't give you any better advice than that at this point in time. Okay, don't get into a short play and then just, I'll wait it out. No, you won't. No, get in, go short if you want to. Put a stop in place. If it hits your stop, fine. Pick another spot maybe later on to try another short again. The beauty of the markets is you can always get back in. Okay, you don't have to just wait it out and hope for the best. Play again another day. All right, enough of that. Let's move on. Inverse head and shoulders here. You know what I'm looking for. Looking at the Dow daily. Here we go. Straight move up. Big pullback. Hit this lower support around the 12,750-ish area and pow to the upside. Very nice push. We're still stuck below the 200-day moving average, and this was one of the indices that did not make a new high today, but that's not uncommon for the Dow. It just moves slower. It's a big old battleship. It just moves slower than the rest of them. So it's trapped between the 200 and the 20 right now. You're looking for pushes up into this area. Then you might want to start looking for some long plays here. This is setting up very, very nicely here for and if we get a push to the upside, maybe on GDP numbers or whatever, this is a good place to start looking for a little bit of a long in the markets themselves. NASDAQ 60, one of my favorites to play by far coming into Christmas. Who doesn't love a text something or another for Christmas? TVs and iPods and new phones and blah, blah, blah. The NASDAQ is usually a champion when it comes to December. So it's very difficult to short. I don't recommend you short the NASDAQ. Short something else. Short the SPX, short the Dow. Okay, just kind of you might want to avoid shorting the NASDAQ. Just not a good idea in December. Going long is a great idea in December. We made new highs today on the NASDAQ. It was up considerably, hit this bottom. Look at how beautifully it hit this little 2610-ish area, bounced straight back up. So once again, we'll see what we get out of numbers tomorrow. But if we move on to the daily, had a beautiful tag of the 20-day moving average. This is what I talked about, guys. From a technical perspective, what a beautiful move today in the markets. Just a beautiful move. So tag the 20-day, jump back up, stuck below the 200. Did make new highs, but as we saw in the Dow, we're stuck below the 200. So looking for pushes up and into this area, and ultimately up above this 2700 area. And then I would say maybe game on to the long side here for the bulls. It's possible we'll stop up here, maybe set up another inverse head and shoulders, which would be a monster of an inverse if that's what happens. But point being, back up and into the 2700 area. Good conservative place to start looking for some long plays. Otherwise, you can dabble above here if you want to. On to the NASDAQ weekly, what a huge push we had to the downside. You can see 1, 2, 3, 4, 5, 6, 7, 8 weeks of downwards action here in the NASDAQ. That's huge. That's a lot of move. That's a lot of downwards action. Okay, so we destroyed about 400 points here by the time we were all done, and the markets are eating it up right now coming into Christmas. This is why you just want to be so careful trying to short the NASDAQ into Christmas. It's just not a good idea after we've been down 400 points here. So I'm thinking that the investors are going to love the techie stuff right now, and it's obvious that they do if you just look at any of the tech stocks like Apple and so on and so forth. Apple was a cherry. This is one. By the way, shameless plug, I cover Apple every day in my subscribers videos. If you guys like Apple, we were talking about long plays when Apple was at 520 and 510. Then one day it completely submarined itself down through 510 and into the 505 area, and now it's at like 580 or something ridiculous like that. But I was talking about long plays in Apple and option long plays in Apple down in that 520-ish area. Was loving it to the long side down in that area. So anyway, we did really well on that because it's Christmas. Hey. So now we're looking at 27. Like I said, overhead right here at the 2714 area. We'll see if we'll actually make that area. But on a good, strong move to the upside, maybe good numbers, we could easily reach this by the end of the week. It really wouldn't be that big of a deal for the NASDAQ. Shooting up the acreage. Here's the S&P with that little inverse head and shoulders as well. We might have had one here. This is what I was talking about. So we could have had an inverse head and shoulders here. If that's the case, the target on that is like, I don't know, 1430. It's up in this area. So here we have the consolidation. We held the neckline for this inverse. We could have another inverse happening here if we get a pullback tomorrow that doesn't go very deep. We could have another one setting up here. The point is, back above this 1410, 1520-ish area is a good place to start looking for the SPX long. As I said, we could be into another hard shove to the upside, and if we are, it's going to be gone, baby, gone. So it'll run, maybe not 100 points in a day or something like that, but we could see considerably strong movement way into these upper areas before we see a big major pullback. And that's why I'm telling you, don't get too bearish on this thing. You know what I mean? Let it run. Just let it run. So if you get into a good long play, let her go. Let her go. Could be very good play. 14, 20, 25-ish area, 30-ish area, you can see the strong overhead being applied right here. Big move up, pull back into the 200. As I said, perfect technicals on all of the indices, and boom, away we go. So just need a little push above this 1410 area tomorrow, and it could be another opportunity to kind of play this thing to the long side. The VIX daily, of course, down. I talked about this all, we were down considerably and the VIX went nowhere. Well, guess what? Now we're up and the VIX has really gone nowhere. We're still comfortably tucked between the 15 and the 20 area, which means that even though it did confirm what we saw today, big push up, big push down in the VIX, that confirms what the market did today. We're still pretty comfortable. There's not a lot of fear in the markets right now, and this really sets itself up well for a Christmas rally as well. There's just no fear in the markets because I think they know Christmas is coming, and technically that usually goes very well for the bulls. The VIX daily, same thing. stuck between the 15 and the 20, and it's literally at the very, very low end of that range. I start talking to you guys about long plays in the VIX when we get into the 14 and the 13 area, and we're just sitting right on top of this, this 15 area right now. They're just no real major fear yet. Now, markets start to drop, big, GDP numbers are bad or something, whatever, and VIX starts to get above 20. Now we're going to talk. Now we're going to talk fear. Now we're going to talk bearishness. Now we're going to talk maybe we don't get the Christmas rally. Okay, but until that stuff starts to happen, I wouldn't concern yourself with it all that much. FAS and FAZ, real quick. All right, I'm just going to blow through this. Loving this thing back above about 110-ish or so. So FAS above 110, I'll make this really quick. I'm 15 minutes into this video already. 110 here, and don't miss that we might be into even an inverse head and shoulders here, as kooky as it looks. And I like my inverse head and shoulders and my head and shoulders patterns to look a particular way. This one isn't one of those, but I will bring it to your attention because it is there. It's got all the makings of a potential inverse here. So back above 110 is your play. Back below 100 for your short. Love the 110 and the 100 area here for your long and your short. If you want something a little bit less expensive, it's back above this 18 and 25, back below 17 short, back above 18.25 for your long and your short on the FAZ for you Canadians out there. All right, so head and shoulders, possible pattern there, obviously, on this one. And here's your neckline right here. So looking at that 17 and the 18.25 mark, that'll do it for the video. Sign up for my newsletter, guys. It's packed full of information. We cover a lot more indices. We cover a lot more stocks. I give you exact entries. Go long here, go short there. Put your stops here. Watch this carefully. Manage it here. Manage this there. I'm a lot more specific in my subscribers newsletter. It's $1 a day. It's not even that. It's less than $1 a day, unless it's February. $28 a month. Well worth the investment. And if you don't like it, then you can quit anytime. As a matter of fact, I had someone ask me, and yes, there is a trial period. If you sign up for the newsletter and you try it for a week and you're like, it's not for me, let me know. Listen, I'll cancel your subscription and I'll refund your money. I'm not here to rob anybody. I'm not here to steal any money from you. And I don't make you sign up for 3 months at a time or 6 months at a time. I don't, if you like it, great. And if it doesn't work for you, it doesn't work for you. I'm not going to hold you to anything. So if you want to try it for a week, great. Let me know after 7 days if you don't want to participate, and I'll, cancel your subscription and I'll refund your money. It's pretty simple. Yes, I do take something other than PayPal. If you don't have a PayPal account, you don't want to use a PayPal account, call me or write me an email, and then we'll hook up, and you can send me a personal check, you can send me a cashier's check, you can pay by credit card over the phone. I don't care. We'll work it all out. So, okay. And then the mentoring. I also do a mentoring course, and it's a one-on-one, just you and I mentoring course. So if you really want to learn what the next steps are in the markets, and you want to learn how does he see that, and why is he going long there, and what's he talking about here, the mentoring explains it all to you. It's a completely immersive study in the markets itself. It's not just, hey, look at this chart, let's talk about it. It's way more than that. There's all kinds of background and information that you take. Bring a paper and pencil, because you'll be taking notes as though you were back in college or back in school again. And I'll give you all kinds of information that you'll need to write down to hang on to. And a lot of it doesn't pertain to the charts, but it pertains to stuff that you'll have to use in order to read the charts correctly. So if you're interested, send me an email. I'll send you information on it. We'll see if there's a good match. And until the next video, we'll talk to you later. Happy trading. Bye.